Hi there, great to have your company. I'm James Preston and you're watching 𝐊𝐴 Media live from Sydney. This is the Buzzing Trend Show. Let's get started with today's important news that could impact markets. The S&P ASX 200 closed slightly higher on Monday, backed by gains in gold and energy stocks as underlying commodity prices rose, although heavyweight miners were weighed down by a slump in Asia's iron ore futures. In contrast, buy now pay later firm 𝐊𝐴 was the biggest gainer on the benchmark after announcing its expansion into Europe and the Middle East by acquiring two companies there for about Australian $160 million. Whereas Synlait Milk was the biggest loser after the dairy producer forecast annual loss due to COVID-19 disruption to its key supply channel in China. The index is trading higher today, taking hits from the Wall Street rally. A roughly 3% increase in oil prices led to an increase in prices of local energy stocks. S&P ASX 200 is currently trading at 7,094.61, up by 48.7 points as of 12:06 Australian Eastern Standard Time. 10 of 11 sectors are higher along with the S&P ASX 200 index. A REIT is the best performing sector, gaining 1.11%. And moving on to a special report, let's dig a little deeper into why iron ore prices are so volatile lately. Well, iron ore prices have been on a dramatic journey starting the second half of the last year. The prices reached a record high of US $237.57 per tonne on the 12th of May 2021, and this rally could be attributed to a robust demand in Chinese steelmaking industries post-China's Labor Day holiday. The most recent undulations in the iron ore price pattern are driven by the combined impact of the Federal Reserve's monetary policy and uncertainty in the Chinese purchase. Fed officials are focused on addressing market concerns that inflation pressure would force central banks to tighten the monetary policy. However, the Fed is not looking to tighten monetary policy, even though some of the Fed officials are ready to consider tapering off bond purchases amid a robust economic recovery. The other significant factor behind the recent rally in the commodity is a strong demand in the steel industry across the globe. Global steel output increased by nearly 7.5% during the last 12 months, with a substantial 24% surge in the current year. China is the biggest importer of iron ore, the raw material used to manufacture steel, and the robust demand from Chinese steelmaking industries and supply disruptions from the leading exporters of the world have disturbed the market equilibrium and pushed iron ore prices to record highs. The skyrocketing prices of iron ore and other commodities have squeezed the margins of domestic consumers in China. As a result of this, China's cabinet decided just last week to curb exorbitant commodity prices. Most of the commodities experienced a decline in their prices this week as the Asian country decided to strengthen its commodity supply and demand management. The prices plummeted due to a strong sell-off, and the Chinese officials have drafted a 5-year plan to reduce the country's dependency on iron ore imports. They are also planning new investments in the domestic mining sector, and they're seeking new imports from the likes of Mongolia, Russia, Myanmar and Kazakhstan, thus ditching Australia, the biggest exporter of iron ore to the Chinese market. With the ongoing iron ore price rally, leading iron ore miners, including Rio Tinto, Fortescue Metals Group, BHP Group and Brazil's Vale SA, reported strong earnings for the March quarter. With so many variable factors, the volatility in commodity prices, especially in iron ore, is anticipated to continue into the near future. Watchdogs are expected to keep a close watch on every economic number and the Fed's comment to gauge their next move. Any comment from China on commodity prices may also ignite another sell-off. Hopefully we will see increased stability in the commodity space, and in just a moment we'll take a look at global taxation after a short break here on 𝐊𝐴 Media.
At 𝐊𝐴 TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming financial and stock market news. 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV.
Hi there, James Preston with you, and if you're just joining us, good afternoon and welcome to the Buzzing Trends Show on 𝐊𝐼 Media, live from beautiful Sydney. It's time to take a look at the global taxation issue following robust G7 discussions. G7 nations, the group of 7 top advanced economies, are further closer to an accord on global taxation of multinationals. The deal will come into existence later this year, which shall contain new rules of taxation to be levied on the world's largest companies. This deal also is a prerequisite of other major deals, such as the Organisation for Economic Cooperation and Development in Paris. Now, the US has been largely in favour of this deal to get through, as it will lead to earlier and quicker talks for the OECD to be closed. The US also said it's very serious about this deal, and its offer to allow big multinationals to be taxed based on the location of their sales is one they do indeed stand by, according to Joe Biden. The G7 group will be holding a virtual meeting between the respective finance ministers this coming Friday, followed by an in-person meeting on June 4 and 5, located in London, to finalise the central agreements of the deal. Moving on, and Aristocrat Leisure, an Australian-based gambling machine manufacturer having headquarters in Sydney, is up by 1.11% and is trading at Australian $41.15 as of the 25th of May at 12:06 Australian Eastern Standard Time, after Citi and Goldman Sachs upgraded the company. Now, this upgrade was a result of strong financial first half results for the 2021 financial year. And shifting slightly, and Viva Leisure, which runs health clubs within health and leisure industries, announced that its upcoming financial year of 2021 results will be hit by increased costs as we roll through the accelerated period, but they'll be slower to break even due to COVID-19. The company expects profit to range between Australian 81 million to 83 million, representing an increase of 25.6% to 31.2%. Similarly, EBITDA margin will be between 16.5% to 17.5%, up from 15.5%. Moving on, the Plenty Group stated that its loan organisations surged 64% on year to $470 million, while the loan book hit $615 million, up 61% on year in the financial year of 2021. The revenue also soared 28%. The Plenty Group provides a technology-led consumer lending and investing platform in Australia. On to one of Australia's most utilised online services in the form of Airtasker. Now, if you're not familiar with Airtasker, they're a Sydney-based company which provides an online and mobile marketplace, enabling users to outsource everyday tasks. Airtasker said that it has raised roughly $21 million from its share placement to institutional, sophisticated and professional investors. Remaining in the online space, but to a less tangible product, let's take a closer look at crypto. Cryptocurrencies took a sharp reversal from the lower levels hit on Sunday. Digital currency seems to be regaining ground, lost during the weekend panic selling sparked by renewed signs of a Chinese crackdown on the mining and trading of Bitcoin. Bitcoin was last up 12.8% to approximately US $39,210, racing all the losses from a day earlier. The second largest cryptocurrency, Ether, jumped to around 26%, or US $2,646, after slumping more than 8% on Sunday to a near 2-month low. Dogecoin also recovered 17% from Sunday's closing to just under US $0.3588. Bitcoin added to its gains late on Monday, following tweets from billionaire Elon Musk that appeared to soften his stance against the environmental impact of the cryptocurrency. Musk said that on May 12, Tesla will no longer accept Bitcoin due to its consumption of fossil fuels during the mining process. Musk wrote that he spoke with North American Bitcoin miners. They committed to publish current and planned renewable usage and to ask miners to do so themselves. This, he wrote, is potentially a promising move for the cryptocurrency. Moving on, let's go through some economic data points to be released today. Tuesday, the Australian Bureau of Statistics will release international merchandise trade and weekly payroll, jobs and wages data. Then the global data likely to dominate investors' focus for today include US FHFA House Price Index March, S&P CoreLogic CS House Prices for March, new home sales for April, and the May Consumer Confidence Index, Richmond Fed Index for May, Eurozone's IFO Business Climate Survey for May, and the UK's public sector borrowing in April. Alright then, well that's all for now. Stay tuned with 𝐊𝐼𝐴 Media for more live market updates. We'll be back with more news on markets, economy and diverse themes and sector. I'm James Preston for 𝐊𝐼𝐴 Media.